Is crypto still a good investment in 2023? While the crypto market saw significant expansion and received a lot of attention in 2021, with Bitcoin attaining an all-time high of nearly $69,000, the year 2022 was an entirely different story. All major cryptocurrencies had nosedived, and many lost as much as 70% of the value they started the year with. Beside the impact of macroeconomics on the crypto market, the crash of Terra Luna, Celsius, and FTX had not helped either. While some crypto buffs remain bullish and optimistic, there's a genuine reason to think about it. Are cryptocurrencies still a good investment for 2023? Welcome back to the Millionaire Mindset. Subscribe if you're new to the channel and you love top-notch finance education content. The cryptocurrency market went through a major decline in 2022, with the market dropping significantly from its peak in November 2021 by the end of November 2022, more than 70%. And just when crypto investors believed they'd seen it all, the FTX crash caused the market to plummet even further. With the possibility of more ripples across the crypto industry, the market had been under a lot of pressure. The new fiscal policies from the Federal Reserve had also done their bit. Interest rates had been successively increased 7 times in 2022 since the rate hike started in March. What started as minor increases of 25 basis points had later aggressively raised to 75 basis points in June, July, September, and November in response to persistently rising inflation. The year concluded with yet another 50 basis points increase in December. This puts the interest rate at 4.25% to 4.5% at the end of 2022. While crypto has frequently been promoted as the panacea for all economic ills, including deflation, inflation, dollar devaluation, low interest rates, and the like, it has responded just like all other risky assets. The rate increases have not been favorable to the price of Bitcoin, keeping it below $20,000. Ethereum, Polygon, Cardano, and other prominent altcoins are also down more than 59% so far. Further reasons for skepticism concerning the crypto market come from the possible regulations the market will face in the year ahead. The 6 essential requirements for currencies in general are that they must be portable, durable, divisible, scarce, fungible, and widely used as payment. And though Bitcoin and some other tokens in particular comply with the first 5 criteria, they've only just begun to have a high acceptance rate as a legal payment method as opposed to just a speculative financial asset. This is one major reason regulations will soon be established for the market in general. Major investors are therefore delaying their purchases of cryptocurrencies due to this uncertainty in the United States and other countries where major crypto players are active. And even without this sudden intrusion by the government that may unexpectedly bring about regulatory and legal costs, investing in cryptocurrencies is already risky enough. Hence, these investors are still waiting until they know what the government will do regarding cryptocurrencies. The most important concern for everyone now is whether cryptocurrencies will be classified as securities, commodities, or another entirely different asset class. However, these coming regulations could also bode well for the market. I'll explain in a minute. The current debate now is whether the current state of the market will remain chaotic in 2023 and how long the crypto winter could last. But while all else seems gloomy, there just may be some tiny rays of hope we can hold on to in the coming year. First off, the crypto market is no stranger to dips and highs. Let's do a bit of backstory on the most popular cryptocurrency so that you can get the hang of it. The price of Bitcoin peaked at around $1,160 in November 2013, after which it experienced a significant price decline that lasted for more than a year. Fast forward to January 2015, and one Bitcoin was trading for as low as $150 to $180. And then in 2017, its price surpassed the previous high set in 2013, rising to a new peak of around $19,600 in that year, only for it to slump again to as low as $3,100 in December 2018. Then came November 2021, when it broke all previous resistance and reached $68,000. At the time of this recording, the price of Bitcoin was around $16,754, which is a great dip from the $47,287 it was worth at the beginning of 2022. Price volatility is, however, not limited to just the Bitcoin market. Because of how much its price fluctuations affect the value of other cryptocurrencies, this is why our focus stays more on it. And you will quite agree that Bitcoin's dominance had a big impact on the sentiment of the cryptocurrency market. So you get the picture. The market has always been subject to price declines, with a known history of recovery. The current situation can as well be termed as just a matter of history repeating itself if we go by the price history of Bitcoin. As a result of this, there is no harm in anticipating a price recovery in 2023. Also, with Bitcoin being the biggest and most accessible cryptocurrency, more institutional investors are buying it as they begin to see cryptocurrencies as a real asset class. In the first half of 2022, 58% of institutional investors acquired cryptocurrencies, according to the annual Fidelity Digital Assets report released by Fidelity Management. 74% of the participants also disclosed their intentions to invest in crypto at some time in the future. With the polls involving 1,052 financial institution managers from across Europe, North America, and Asia, we can tell that this was a large sample size. In response to this, the Bank of New York Mellon has stated its intention to start providing custodial services for Bitcoin due to the significant demand increase from institutional investors. The largest asset manager in the world, BlackRock, has also begun discussing possibilities with Coinbase to make its Aladdin trading platform accessible to customers who held Bitcoin on Coinbase. With these large institutions who have greater purchasing power than the typical retail investor joining the market, there's no telling how high the price of Bitcoin and the crypto market in general could go. Another positive sign we see that suggests the bear market won't last very long is how fast blockchain and crypto use cases are growing. There's no doubt that the usage of digital currencies has grown and gained more acceptance than it did a few years ago. Nowadays, there are more cryptocurrency projects and users than in previous years. Take the gaming business, for instance, where the usage of credit and debit cards to make payments is being replaced by the use of cryptocurrencies, which reduces the need for middlemen. Thanks to blockchain technology and digital currencies, even gamers can also earn incentives in the form of tokens while playing games. Then there are more prominent businesses and financial institutions that now accept Bitcoin than ever before, such as Microsoft, AT&T, KFC, etc. There is also the good side to the effects of the possible regulations the market may face in 2023. Critics have been against cryptocurrencies from the onset because of their trust, which stems from a lack of regulation. But now that supervision is coming, things might just be about to change. The United Kingdom, for instance, has decided to include crypto among the activities to be regulated through the proposed Financial Services and Markets Bill, even going as far as giving a limit of no more than 10% for diversified portfolios. The European Union as well will be regulating Coinbase and Binance, as well as other crypto exchanges. And while the US is still in dilemma about the right category where digital currencies should be placed, Bitcoin investment could soar as retail clients as well as critics would start to feel safer. Hence, the acceptability and credibility of the crypto market would grow as this regulation continues to spread around the world, which would improve the prospects of digital assets for 2023. At the end of the day, investing in crypto in the coming year will require a lot of observation of the market to identify the profitable ones you can invest in. With the obvious uncertainty that still surrounds the crypto world, keeping an eye out for fundamentally sound cryptocurrencies that have had a sharp decline in value is one of the greatest ways to identify those with high potential. And investing in them now that prices are down is the best way to go. Bitcoin, for instance, is unquestionably one of the most fundamentally sound cryptocurrencies available right now. Even if it merely retests its most recent highs, then it would become the most rewarding cryptocurrency by 2023 if purchased at its present lows of less than $17,000. Then there's also Ethereum, which just went through a major blockchain upgrade. Another fact about crypto remains its unpredictability. While all currencies are prone to volatility, none fluctuates like digital currencies. So despite all the green lights we see for the year ahead, which encourages investment, the best strategy to surviving the ongoing crypto winter is by being patient and playing the long game. Bear in mind, however, that there is a huge possibility many altcoins would be wiped out in 2023 as regulations roll out. Also bear in mind that the possibility of a recession is real and could have a huge negative impact on the crypto market. How do you intend to approach investing in crypto? Let us know in the comments section below. Also remember to like the video and subscribe to the channel. Thanks for watching and see you in the next video.